Okay, here is our stock market today live update. We're going to look at the futures since they're trading live right now. But before we do that, we are going to just take a look at how the S&P 500 closed. A lot of somewhat volatile action on the stock market today. Ultimately, this is shaping up to look like a bear flag. Now we'll zoom in on the daily chart here for the S&P 500. And so today was day 17 of the daily cycle, and we made yet another low. And so again, as I said as I've said in previous videos, we're now definitely a failed daily cycle, and we have breached this level as well, this previous daily cycle low. And so we are officially making those lower lows. The two areas that we want to think about are October 7th, which is next Friday. That's our jobs report for October. And then I think it's either October 12th or October 13th, we have the CPI print. And so if we think about that, that gives us still, just kind of thinking of a scenario here. We would be on day 23 when we get the jobs report, and somewhere around day 26 when we get that next CPI print. And that's going to be an important signal because we know the Federal Reserve is going to be meeting in November. And if they were to raise, let's say, 75 basis points, the market probably wouldn't have a very positive reaction to that. And so what the CPI number tells us is going to inform a lot of what people think the Fed is going to do. And notice we still have this gap up here. So if we do end up coming out of this to a rally, again, you can kind of easily see this being a ceiling. And let's see what percentage increase would that be? Like, just kind of scenario planning here. Oh, that works out almost perfectly, right? And that's the thing, because we're weak, we probably don't get all the way back to this level. Maybe we stop like somewhere here, right? Like in this neighborhood. That still gives you an 8 or 9% rally, a good opportunity to kind of short. Obviously, this was a good short. Well, really, if you're thinking about daily signals, once we went below this low, right, that was your 36, 37 level. That was your short opportunity, but you can see we actually recaptured it. And that's why we're going to look at that stock market live data. Like, we're going to look at the live data in the form of the futures. Let's just jump to that right now. So the futures right now, daily chart is starting to roll over, right? I'll zoom in here. So, the futures start trading at 6 p.m. So we have been trading. It's about 8:50, September 29th, by the way. And so this definitely looks bearish, but it's still just an inside day so far. And so we are at the lower end of the range. So that is important. And that suggests this is essentially building out a smaller bear flag within the context of this bear flag. And if we zoom into hourly price action, for instance, you can see that's where the rollover begins. This swing high on the hourly chart, which is a lower swing high than this one, right? It's like we tried to rally up and now we're getting a bit of a double top kind of action. Again, these price action signals, they play out on all the time frames. So that's the futures looking like, we're not looking like a potentially weak Friday, but we've only been trading for less than 3 hours. So too early to sort of kind of write things off. But again, we're at day 17, so probably have at least another 7 to 8 trading days of downside left. That doesn't mean it's going to happen in a straight line. There will be bounces along the way, as there always are. And if we look at the weekly chart, it is week 15, and I've added this yellow moving average here, which is a 200-week moving average. We have not crossed below it. We haven't even touched it yet for the S&P. Yet for other indices, we have already done that. And in fact, for IWM small caps, we are trading firmly below it at this point. It's potentially going to act as a ceiling of resistance, or at least that area. So that's an important level to watch, even if we bounce. So we knew the weekly cycle was in decline. Once we made that swing high, that created the week 9 swing high, and now we're just making lower lows. That said, last cycle bottomed on week 16. That absolutely does not mean this one's going to has to bottom on week 16 or week 15. But just know we're not early in the daily cycle anymore. That said, just a general rule of thumb way to think about it, you would expect that this daily cycle is going to be left translated, the same way that this one was left translated, right? So we had a short rally for 5 weeks, and then we declined for 11 weeks into a week 16 low. Now we've had a 9 week rally. If the pattern holds, think about that. That means the decline would be for more than 9 weeks. The same way we had a short rally and a long decline, you would expect it. Think about that. If 9 weeks is a short rally, then a long decline will have to be longer than 9 weeks. And so that probably puts you at more of something like a 20-week cycle, 18 weeks at the absolute least. That doesn't mean it has to play out that way. Again, that's a scenario that you want to kind of plan for. That would give us our low in early November. That's really interesting. That would be right around the midterm elections, the week of November 7th. Very interesting. So that's going to be something to watch. And if we look at the monthly, not much has changed. On the monthly level, we're flirting with that 50-month moving average, which essentially corresponds to the same level as a 200-week. So we'll probably hit those together. And you think about that, this monthly candle, that's important. This monthly candle is about to close in literally just one trading day. We have just one trading day left in the month. And not just in the month, but the whole quarter, right? Because October starts a new quarter. So how is the quarterly chart shaping up? Oh my God. I hope you're learning from this channel. That is an incredibly bearish looking quarterly candle. Because we tried to rally up. It was nice and green at one point, and we just completely failed and went red. I'll zoom in here just to make sure that I'll put a finer point on this. We opened the quarter at, what is that? 37.81. So, and the quarter started, what was that? August, right? So the beginning of August. So we opened August at 37.81. And then we rallied pretty dramatically. I mean, relatively speaking. We rallied all the way up to 43.25. And then we just completely failed. And it's like, how do I know that? Because of the candle, right? We know what the opening price of the candle is, and we know what the high is, which means at some point we had to have rallied from 37.81 to 43.25, and we now find ourselves back at 36.40. That's bad news bears. That's a really bad look. And think about what that sets up for the next quarterly candle. We're talking about big patterns, because when does the next quarterly candle close? That's right, at the end of December. It takes us to the end of the year. So if this is our setup for the Q4 candle, my God, we could be setting up for some serious downside. And that's why I think that 3,200 area seems pretty ripe. Now, we could see a world where we get that plunge low and then a V recovery. So the Q4 candle actually ends up closing green, right? It's possible. Doesn't mean it's going to happen. But what do you notice here? I'm actually going to take off all of the drawings. We'll just look at a clean chart. This is a quarterly chart. Like what does your eye get drawn to? I'll tell you. We generally don't have patterns where we have 3 red quarterly candles in a row. 1, 2, 3. This was your 2020 COVID crash. This was your meltdown in Q4 of 2018 when we have our Christmas Eve bottom, right? This is another red quarterly candle. Here's 2, right? Here's 2, but they're not consecutive. Here's another 2. Here's 1 by itself. When do we have multiple quarterly candles, like more than 2 consecutive quarterly candles? We have to go back to the financial crisis, right? We started the cascade lower in October 2000, in the Q4 2007 candle, and then we just dropped for 1, 2, 3, 4, 5 candles after that. 5 red candles that all made lower lows. Right now we have 3 red candles that made lower lows. This made a lower low than this. This made a lower low than that. This has made a slight lower low than this. So we're making lower lows on the quarterly chart. The stock market is making lower lows on the quarterly chart. The S&P 500 in this case, SPY. And then you, of course, you go back to the 2000 bubble burst. You have multiple quarters in a row. That is important to watch to observe though. So notice for the and this is super important. Notice for the financial crisis, we just had 1, 2, 3, 4, 5, 6 quarterly red candles in a row. Again, all lower lows, dropping us into that bottom, that March 2009 bottom. This top after the 2000 bubble actually was a little bit more complex. You had red, and look at this is a complex candle because it started green. You can tell because the upper wick. So you have 2 red candles in a row, 3, 4, and then you have this green candle that must have been hard to trade in real time. In the end, it's just an inside candle. But I can just imagine people got whipsawed the hell around here because this is a whole 3-month period also thinking about that. At some point, there was a furious rally, and then there was a pullback, and then we kind of ended, just really frustrating. And then we make a lower low. Then we consolidate again. Pretty solid green candle. Probably got folks excited. Then we make a higher high. This candle was green at one point. Then it fails into this kind of doji state. Then we make a lower low compared to these. But we hold above this. So this whole thing is really just consolidation of this quarters candle. Then we finally get that low. But even after that low, we actually consolidate for, I guess this was a lower low. But this is almost like 3 quarters of consolidation near the lows. Just a really tough environment. Whereas this was just like straight down and then a rally. I mean, obviously this candle was probably scary, but you can see it's a higher low, right? And then this candle was scary, but it's a higher low. This candle was scary, but it's a higher low, etc. So all that to say, this decline was easier to manage than this one where you got oh God, maybe we got our bottom. We have a green quarterly candle. No. Maybe we have our bottom. No. Right? So, and even this, after getting this candle, this is frustrating. Whenever you see a candle with that with crazy wick on either side, unless it's like a hammer candle, either way, that means there was some violent trading happenings, a false breakout or a false breakdown. Just really ugly stuff. So we're going to have to see what kind of decline we get. What I will say is this is probably still kind of early, right? And again, that doesn't mean we could end up with even a green quarterly candle for Q4, and then we have a collapse in Q1 of 2023. Who knows? We're going to have to watch it closely. But clearly, this is something very different than these previous little Mickey Mouse declines. And we're going to have to watch to see how it develops, how complex it becomes. So that's the quarterly picture. We know that's opening. And I think the other thing to think about, I'll remove the drawings for a second and I'll just keep the indicators. So these are your same moving averages. So this is your 10 period moving average and this is your 50 period moving average. So because I changed this into a quarterly chart, these are now, this is your 10 quarter moving average, right? And this is your 50 quarter moving average. So this is actually basically a 25-year average, the 50, right? Because 50 quarters, wait, no, that's not right. Right, so 50 quarters, right, so it's about a 12 and a half year average. Because 50 quarters is about 12 and a half years. And 10 quarters is about 2.5. Wait, is 10 quarters? That's right. It's about 2.5 years. So we closed last quarter below the 10 quarter moving average. And then we actually crossed well above it this quarter, but then failed below. And so again, this is just telling you we're in for something maybe a little bit more protracted in terms of a decline. You can see in COVID we crossed below it, but then we just kind of rocketed higher. I think we essentially closed below it here in that that little meltdown. But you can see even then there was a bit of a rally, and we lived below that. So that's another thing to keep in mind for the global financial crisis. We actually closed 2 full quarters below the 50 quarter moving average, so the 12.5 year average. That's a really rough decline. To decline below the average price for the last 12.5 years means you're in a really, really, really deep downtrend, like really bad news. I am absolutely not saying we're going there, but it's a good number. It's a good thing to frame of reference. Like right now, that level is right around 2450, and it is still rising. So as we continue to make our move lower / consolidate at the lower end of the range from this decline, this is going to have time to catch up, right? Maybe it's in the 3,000 area by the end of the quarter or something like that. We'll continue to watch it. So that's the S&P. Actually, while we're on the quarterly chart, let's just look at the Qs, right? So the Qs don't have as much history because that was the index itself. This is just an ETF. But you can see during the global financial crisis, we actually didn't have 12.5 years of data. So we didn't have a 12.5 year moving average, but we crossed well below the 10 quarter moving average. And same deal, we closed below the 10 quarter moving average last quarter, and now we essentially got rejected by it. Man, the 50 is like all the way down around the 140 area. So that would actually be like another 50% decline from here. Again, my base case wouldn't be that we get all the way down there. But you have to just kind of watch the price action and let it unfold to tell you what's sort of afoot. And on the weekly chart, this is what I was mentioning. So the Qs are actually already below the 200-week moving average as of this week. And I'll add the drawings back on. So it's week 15, same as the S&P, same count, just a little bit more dramatic. And on the weekly, on the daily, it is day 17. Again, they're all in the same picture, just slightly different levels. And if we look at IWM, day 17, on the weekly, it's week 15. Notable that IWM is actually green on the week still, but a very ugly candle. And this is what I was calling out. Notice we're well below that yellow 200-week moving average. And also the fact that 200-week average is kind of flattening out a little bit. That is not a good sign, even though we are seeing a green week. We need to see a lot more. Snapback. And on the monthly chart, again, it's month 30 of that 3-year cycle. That's true for all of them, SPX, Qs, etc. Let's just remove the drawings for a second. So the Qs, this is your monthly. And so that's another notable thing. So the Qs are well below their 50-month moving average in the same way that they're well below their 200-week moving average. That's not surprising. And you can see this 10-week moving average is just like plunging. And what it's actually doing, this is kind of, I hope this is starting to become obvious to you, is it's going to cross below the 50. Because the 50 is flattening out and then this is trending down. And so at some point they're going to cross what you would call, quote unquote, a death cross. But you don't need that signal to know this is bearish. You already know, you can see we're in a downtrend on the monthly chart. I mean, look at this, this is the monthly chart. I mean, look at this candle just sticking out like a sore thumb. My God, that's bearish. And if we zoom this out to the quarterly chart, you can see we're much closer to that 50 quarter moving average than any of the other indices. And so this is definitely something that is a little bit concerning. That 140 area looks like a magnet. It's really a question of do we maintain above 100 at that point? Because it doesn't look like there's a lot of resistance below, support below there. This one might actually have a dance with its 50 quarter moving average. That could be really interesting. And so I'll put those drawings back on. I'll turn that back onto the monthly. And so that's the picture there. And I'll say we are clearly trending lower. So it's really a question of picking your spots. Do you want to be aggressive and try to short on the lower highs? Or are you more in the conservative camp? Stay in cash, wait for that low, because there is going to be a low at some point, and that's going to be an amazing trading opportunity. Because assuming we get a right translated long-term cycle, we could be rally for many, many months. I mean, this rally lasted for 20 months, right? Doesn't mean the next one will be right translated. We'll know more about that as we see that develop. Do we get a right translated daily cycle? Do we get a right translated weekly cycle? So on and so forth. So that's the lay of the land. Definitely take a look at the links in the description to see some past videos, get some more context. Subscribe if you haven't. Hit the notification button so you're sure to get these updates. And certainly follow me on Twitter. I do provide more real-time updates, sort of updated cycle counts. And, you know, if something kind of crazy goes off, some kind of alert that I've set, I definitely try to alert followers there on Twitter. You can see a link in the description to find my profile. But I'll see you next video.